Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be providing an update on HIVE Digital Technologies. This is one that's come out with a ton of news over the last few weeks. Obviously, the Bitcoin mining sector as a whole has been very exciting from an investment standpoint. And today we're going to be joined by two guests, both Aydin and Frank, to help understand some of the recent moves and talk about this business positioning moving into next year's halving event. Now, before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comments section below if you're currently holding shares of HIVE, how you think they're positioned compared to the other Bitcoin mining companies we review, and your outlook for 2024. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we're going to be providing an update on HIVE Digital Technologies. Now this is very timely. They've come out with some big news over the last few days and a special holiday edition here for you. We've got the holiday hats on and we've got two guests. So we've got the co-founder and chairman, Frank Holmes, who's been on the channel previously. We also have the CEO, Aydin Kilic, to help answer some questions and give us a better outlook moving into 2024. So gentlemen, thanks so much for being here and happy holidays.
Thank you, my friend. Thank you.
Yeah, you're both welcome anytime. So I know there was some big news. We're excited to talk about it. I've been seeing it in the comments. But for those maybe who've missed our prior discussions on HIVE, can you just give us a quick high-level summary of the organization and operations?
Yeah, we've got 140 megawatts globally in Canada, Sweden, and Iceland. We hit 4.3 exahash last month. We put out a press release with the purchase of 9800K Pros, which we really bought because they had the best cash flow return on invested capital profile at the time. We'll get our target exahash within our existing fleet to 4.8 exahash. And that gets us get our fleet efficiency down to 29 joules a terahash. So we've been stealthily planning for the halving all the while, which Frank will tell you about building a GPU business, which seems like we haven't been getting any credit in the market for yet.
Yeah, I want to touch on that. And Frank, I'll let you jump in there. It's really interesting right now, some of the stories that are picked up or not picked up on in the media. So I definitely want to get into that, Aydin. But Frank, I'll let you comment and then I'll get into my next one for you there.
HIVE has unique experience mining Ethereum. And Ethereum was always a much more stable, high profit margin business than mining Bitcoin. With all respect to the hardcore Bitcoin, it's just running a business. When you're running this business, you're running a data center business. And when you run GPUs, it was like running to mine Ethereum. It was like driving a Bugatti. The sensitivity and the cost of those chips. One of the big things we did 18 months ago, it was 2 years ago, was to buy all these NVIDIA chips that allowed us to mine Ethereum at the moment, get our costs back. And then we started mining when Ethereum went away, these alternative coins and convert to Bitcoin. And in that journey, we started building out our HPC, and what exploded for us was the boom in AI with ChatGPT. I mean, I just blew everything out of the demand was huge for these chips, and we've been slowly growing that. And Aydin's doing a phenomenal job with the team. We've been able to take our intellectual capital, our physical capital, and all of a sudden we're at $250,000 a quarter. Then we're now over $250,000 a month. By March, we'll be up at year end. For our year end, it'll be $250,000 a week. And hopefully this time next year, our models, based on costs and everything today, project that would be $250,000 a day of high gross margin business. And along with doing that, we've been able to maintain our 1% of the global network of mining Bitcoin. And that's been a key part because inflation in this industry is like Argentina. I mean, it's at 5% a month. CAGR is pushing close to 100% inflation with more and more people coming out with machines mining Bitcoin. It's been this sort of incredible run to maintain that 1% of the global network. And that's what we've been able to do, and then be able to pivot as we build up two channels of revenue for HIVE, and maintaining the highest revenue per employee as like a gold royalty company like Franco-Nevada. That's sort of been the difference how about discipline versus our peers would go sell shares, buy more equipment, sell shares, buy more equipment. And that's not been our business model.
Gotcha. Yeah, it's definitely interesting to watch that global hash rate continue to grow. And you're exactly right, Frank. If you're not growing in this business, you're shrinking. Luckily for all of us, transaction fees have been very fruitful the last few months and hopefully continue. And I would agree with you guys. You've done a great job kind of transitioning when Ethereum went from proof of work to proof of stake. You had to pivot and away you go, right? So the other piece of news that just recently came out, and I know a lot of people are asking about, is this $25 million bot deal, and it was positioned as kind of a way to protect the HODL. So I'm curious to get your guys' thoughts on that and what that does for the company.
Well, I think the big thing is the HODL. That's the most important part. And looking for brownfields, that's what we've been doing for electricity, because we think electricity is going to be very valuable as we go down the next few years. And the big boom in data center construction, not just for Bitcoin mining, but it's a huge, we're talking about hundreds of billions of dollars are going into data centers in the great global digital transformation. And we want to be in that space and make sure we can do everything to have stable green energy. But the hodling is important. We use a lot of our coins to build out, maintain that 1% of the network and to build out our HPC. Now we want to replenish those because we think that Bitcoin has much more torque on the upside. And that's really simple.
Perfect. Yeah, and I agree. Obviously, I'm a big Bitcoin bull, and I think the time is good to have some of that on your balance sheet. So I think it was a nice move there, you guys. Now the next question, shifting gears a little bit, you talked about on the 15th, I believe, a major step in kind of the AI growth strategy, and I know that's kind of been a theme here for the start of the conversation. But can you provide some insight there?
Yeah. Oh, Frank, you
Go
want
ahead,
to?
Aydin.
Yeah. So one of the things that I think is important to point out is the amount of foundational work, the amount of research, the amount of trial and error, even when you've got extremely experienced guys to build new technology, right? And so we've been hitting these internal milestones. And so we sort of say, okay, how do we parlay the momentous accomplishment, but make it understandable? Because often I'll be talking to people and I'll have all this technical jargon because I'm just with my fleet of engineers and we're in that world, and so we just want to let people know that we're hitting these breakthroughs, and there's all this foundational architecture that you have to build if you want to get into the AI business, right? And so you have to have special networking equipment, special storage, unique processors, yeah, all in addition to the GPUs, right? And they all have to work in concert like a symphony with like sublime uptime, right? It's very different than crypto mining. Crypto mining, you want every electron going onto your ASIC, and uptime, you strive for the best, but you don't want any redundancy, right? The AI stuff has to be airtight, right? And so what we've done is we've taken an operation that at one time was one of the world's, if not the largest Ethereum mining operation in the world. We had 150,000 Ethereum GPUs when we were mining Ethereum, right? We were over 1% of the Ethereum network. A third of those GPUs were, and this is very important, these are enterprise grade NVIDIA GPUs that have the bandwidth and memory to do high performance computing and AI, right? And as we try to educate our peers, what you want to pay attention to is the amount of RAM on these cards, right? So everyone's heard about an H100. Well, what makes an H100 special has 80 gigabytes of RAM on it. The A40 has 48 gigabytes of RAM, so on and so forth. And so we have these NVIDIA GPUs that had this capacity to do next generation compute. But we had to build the infrastructure around these GPUs. And we started that exercise at the beginning of this year. And that goes to Frank's point of having $250,000 a quarter, right? And this is banked money on our income statement. This isn't like, oh, maybe we're going to do it. And so we were expanding, we were buying more servers, building this unique custom bespoke network infrastructure that like we have network technicians and architects that are speccing this stuff. They're collaborating globally. And so we're building the secret sauce. And that's when you start to see this ramp up in revenue, right? Because we're building a new mousetrap is probably the best way to put it, right? And so when you have, we put a target out that we'd be at 4,800 GPUs. That's in play, we're going to have the 4,800 GPUs online in January, and all the revenue figures that we put out in our recent AI update are based on infrastructure that's installed, and then we just wait for the market utilization to kick in, right?
But so, it's also really, really complex work. You're building a brain. And what you don't realize is that the corpus callosum between the left and right hemispheres of our brain, it can't be a copper wire. And so you need these special cables. And guess what? Those coders out there will pay you for that cable, and they'll pay you for more memory. So all of a sudden, you're Bitcoin mining and you're making 10 cents an hour per chip. And we're making $1 on HPC. And with the 100s, you're making $4 an hour. But you have to have a 1,000-page document to put all the wires and connect all these chips. So it's a big learning curve. It's been very exciting for us, but demanding of what you're building. And just like having decentralized Bitcoin nodes and decentralized mining facilities, we believe that the HPC world is going to want to have decentralized data centers that are not controlled by Microsoft and AWS. Not that they don't do a phenomenal job, but they really are quasi the government in how they function. And the idea that this is your code, this is your IP, you develop this, that someone cannot take it from you. That's where they want to have the idea of this sort of independent data centers. So it's really going along Web3, how we're using our business model. But for simplicity, because you're a miner, you'd understand, to get $100 million of revenue in Bitcoin mining, you need about 100 megawatts of electricity. That's just for simple numbers. To get 100 million in the HPC, you need 10 megawatts of electricity. That is the big difference when you take a look at your costs and your line items. The other part, though, is the CapEx for in Texas. Fred just bought the big facility, paid 500 and almost 600,000 per megawatt for that electricity. Well, if it's a high performance computing data center, it's $10 million per megawatt. So you have a bigger front end CapEx spend, and then you have but a much higher return. So we think we can get as Bitcoin miners today, you buy a chip, and you're talking about with the halving taking place, it could take up to 400 days, 500 days. You see some of these numbers. With the HPC, we're talking 9 months. 6 to 9 months is the payback.
Yeah, exactly. The 6 to 9 month payback. And what I was actually just putting into context, like you think about crypto miners, this builds upon Frank's notion of it's basically 10 times more revenue dense per kilowatt doing high performance computing, right? So you have 100 megawatts. If you want to do $100 million for crypto mining, you only need 10 megawatts with HPC. Here's the thing, the profit is even more of a lift. And the reason why is because we have to run our HPC in a tier 3 data center, okay? This isn't, and that's one thing I do want to share with you, your viewers. You can't just be like, I'm a crypto miner that runs ASICs in an exoskeleton with fabric filter walls, or just containers in the middle of like an oil field or whatever, and we're going to put GPUs in there. No, it's completely different. And so you have to have like our tier 3s, you can eat off the floor. It's air conditioned, there's redundant power, there's redundant networking. Each server has 2 network ports. You can have, everything's about redundancy and sublime uptime. So right now, crypto mining hash price is something like, I don't know, maybe $80 a petahash, right? And so per day. And so if you have, I don't know, say 10 exahash, you're going to have daily revenue right now is going to be 80 times 10,000. you're going to have, sorry, I'm going to do it on this calculator. It just dawned on me, Frank, when you were talking. And so that's why I want to share it with you too, because you can have, 800,000 a day. You'd have to have, if you have 10 exahash, which is a lot, that's a lot. That's going to get you maybe 290 million, but that's 10 exahash, that would be hundreds of megawatts of capacity to get that. And we can get 100 million of revenue from that 10 megawatts, right? Now, here's the thing. Tier 3 costs more to run. But if you're earning $1.50 or $2 an hour, let's just say you're paying 30 cents a kilowatt hour to run a tier 3, and you're earning $2. What's your profit on a per kilowatt hour basis? It's $2 minus 30 cents, $1.70. Okay. If you're mining crypto and you're getting 10 cents, maybe even if you've got XPs and you're getting 15 cents a kilowatt hour, a crypto miner that's got lean costs is maybe all in a nickel. You're making 10 cents a kilowatt hour. So now you're comparing 10 cents to $1.70. It's 17 times more profitable. The revenue's 10x, but the profit's even higher. It's like 17x, right? And this is like probably the simplest way to boil it down, because on a per kilo, like everyone's trying to get like 200, 300 megawatt sites. Like it's a land grab and it's an arms race, and that's fine. So how are we special? How can we have a unique angle where we can have high profit margin, stable business with less energy? We innovate with GPUs, right? And that's a whole point of this business unit, right? And so
and to complement Aydin's thought process, Aydin, is that we were the first to do a balancing the grid. We were first to do this before Riot did in Texas, et cetera, and work with utilities at a very sophisticated level, and hedging energy. Well, you can't do that when you're in doing this GPU, not mining, but you're doing GPU HPC. And Aydin, once you explain that big difference, you have to be up 99.99% of the time. And that's a big difference. Would you agree, Aydin?
Yeah. I mean, you look at crypto miners when people were scaling to the exahash level, right? You were seeing Bitcoin, like Anthony Power, who did a phenomenal job at Compass Mining, writing about Bitcoin per exahash, because he realized, he's like, hold on a second. This company says they have 1 exahash or 5 exahash or 10 exahash, but they're only making this much Bitcoin. HIVE says they've got 3 exahash, but they're making more Bitcoin. So clearly, HIVE is making way more Bitcoin per exahash. What is that? It's uptime. So we were seeing like 60% uptime in the crypto mining game. I mean, like bulge bracket players, like no names, but you're talking about guys that would have 5, 10 exahash. And when you do the math, like Anthony would show, okay, the top performers, top 2 or 3 companies always have like, say, 90 Bitcoin per exahash on a monthly basis. You got other guys that are doing 80, 70, 60 Bitcoin in exahash. The spread is not over 5%. The spread's over like 40%. So you can't have like 60% uptime in HPC. Like that's unheard of. Like below 98%, you're already shitting the bed, pardon my language, right? And so it's a completely different playbook. So like, I was on a panel recently in Dubai, and, one of the companies that was getting into HPC, they ordered some H100s. They have 0 pedigree running GPUs. And all they were talking about was that, they have experience building high power infrastructure, and you need 70 kilowatts per rack. I'm like, dude, if you think that's the main challenge, you've got an encyclopedia of like, a journey ahead of you, because the power is like the easiest part, right? And the thing is like, we've been running one of the largest fleets of GPUs historically, so we already understand those nuances, right? As Frank said earlier, right, we're basically building an elastic supercomputer that functions in real time with extreme elasticity, extreme fluidity, and extreme resilience, right? And it's way easier said than done. Now, when you travel, like Frank and I have been to Silicon Valley twice in the last month, right? And when we meet our peers and colleagues, we did a contest that we announced, this was press release, to allow researchers in AI who are doing really cool disruptive things in large language models to use our hardware to break benchmarks. That's happening now. We've already deployed some servers and some nodes. But the thing is, you can't get there if you haven't even built any GPU infrastructure. So everyone's like, it's like when Frank founded Hive, right? I had founded a public company. I was actually inspired by Frank's story at Hive. And back in 2017, you could literally raise money on an order of ASICs. Like I got an order for S9s. No data center, Hive actually had a facility in Iceland. It was mining Ethereum. Company I founded had a facility in Washington. Okay, we both had real businesses. Nowadays, people are like, we just bought H100s. Cool. It's like, okay, where's your networking going? And one of the press releases I saw from a company, no names, was like, oh yeah, we bought the H100s, but we don't have the network equipment yet. They slid that in right at the last bit, probably because their vendor was like, by the way, you're not gonna be able to run these unless you have the proper network equipment, right? But we got the H100s, so they look really cool. Maybe we'll take some photos of them, and so build out the infrastructure, have the uptime, have the resiliency, and then go engage the market, and then you're gonna have to actually deliver. Well, we're doing that now, right? We've taken the show and prove approach. Let's build a cash flow, show it, demonstrate it, and scale it, right? So now we're scaling. So I think that's worth pointing out. But I did want to address one thing, Frank, and I think that there was a lot of FUD recently. There was some analyst reports that came out, and people talk about the cash cost to mine a Bitcoin, right? And what I've noticed, we did a forensic analysis, and I'll share all the data with you. We did a forensic analysis of all the public company quarterly reporting for September 30th period end, okay? And some companies suggested we had the most expensive Bitcoin production cost. Here's the thing. Number one, we did not. Number two, it's all about how you stack your expenses. So what we noticed is some companies have exorbitantly high corporate G&A, okay? And the best way to do an apples to apples is, well, how big are you? What's your G&A per Bitcoin, okay? You had companies that were showing sub $10,000 a Bitcoin direct operating costs. And that's what gets broadcast in the market, right? And they kind of brand themselves as a nuclear hyperscaler and say, hey, you know what? Like, we have 2-cent power and we can mine a Bitcoin for $8,000. And when you take that company's G&A and you look at it, their total cost came to $30,000 a Bitcoin, and they had a negative corporate mining margin, right? But no one's covering this, because you know what? If you can just go raise money for these companies, scale the hash rate, okay, and you're a banker and you're getting a clip off the money they raise, you pretty much can just have a chart of the network hash rate in your Wall Street boardroom and be like, sweet, I own, I'm funding 40% of this hash rate. I'm getting a 3% clip on it. And who gives a shit? Just like, okay, tell my analyst, focus on this, just focus on this here. Never mind everything else that's going on. And so like three of the big players had negative gross mining margins last quarter when you account for the G&A. I'm talking cash. You're a McNallie Money.
And not getting back $50 million from the utility. Like, what does it cost them to pay people?
That brings it to 4. I haven't even included them, Frank. We had a positive cash mining margin last quarter, okay? And so that's kind of what drives me crazy.
So it's a line items. What Aydin is sharing with you is that, here's your G&A. What do you put in your G&A versus, here are your professional fees.
Yeah. And
we would put the professional fees as part of it. So some people take it and make it separate. And so therefore they're reporting that they're producing less. But, and what we see is so competitive now that if we do our ATM through 2 Canadian brokers, we were also in the US. Stifel's huge in the US, but Stifel and Canaccord, we're the first to do a cross-border transaction, both jurisdictions, etc. Well, another person gets upset, and so they immediately start writing like negative narrative. And so it's just very competitive. I've seen this before back many decades ago in the junior gold space in Canada, who got the deal, etc. And what we're trying to do is I guess my older gray hair is to say, let's focus on running the business, What can we do to have, on a relative basis, the highest cash flow return on invested capital? I'm very comfortable to say that our revenue per employee is the highest. Our G&A per Bitcoin mined is the lowest. And what we wrestle with is green energy, and the cost of green energy has gone up. There's no doubt the Russia invading Ukraine put a penny to 2 pennies around the world on the cost of electricity. Doesn't make sense. It's like nonlinear math. All of a sudden, everyone became very fearful of it, and you could see some of the politics happening. So our cost of green energy has gone up, but still, push comes to shove. When I look at it, we're very, very competitive in what we're doing on a global basis, and so I'm thrilled about that. I want to stay positioned that we try to do everything we can have with renewable energy. We are exploring what we think it could be really exciting is nuclear energy, because it's the closest to that renewable. And there's a big push now to have these new modular units set up for nuclear energy that are going to come out throughout the U.S. and Canada. So you see that Microsoft, Google, they're all putting money into that space. So we'll see how the only way you can really get your economies of scale to help nuclear energy now to get the return on their capital back faster is to have a Bitcoin mining facility.
Yeah. No, it's great dialogue. This is why I absolutely love this forum, is because you can have this type of kind of off the cuff discussion. You hit on so many great points there, you guys. I know firsthand, working with Anthony, you can really make the data tell various different stories depending on which metric or timing or whatever. And what we try and emphasize is these are individual metrics at a snapshot in time, right? And you guys did a great point of saying they're not, it's not all equal calculations or equal involvement, and that's what we're trying to do, is create that transparency and that openness for the average retail investor. The other thing that you guys really said that kind of hit home with me, the industry's come a long way from guys putting miners in sea cans out in a field, right? It's very technical. You can't just open a data center like this. I've been to some of these high level, high security floating floors. Like, these are remarkable engineering feats. And it is funny to see people kind of riding the coattails of AI and saying, oh, AI this or NVIDIA that or GPU this, but understanding how to use those and how to make them efficient and return those kind of margins that you talked about is a whole nother realm. So I'm glad you guys spent some time on that. Now, my final question for you, we've talked a lot about all the excitement in the business. Obviously, the margins for some of this AI compute are very attractive, as we've discussed. So what would you say is kind of the main focal point now going into halving? Is it really focusing on Bitcoin and that HODL while the block reward is still where it's at? Or is it exploring this HPC, or is it both? Or what should we think from the investment standpoint?
Well, I'll give you my opinion on that. We were at a conference in Amsterdam, and then prior to that was in Prague, and Caitlin Long is a very smart attorney, has her own custodian bank, and went to Harvard. So he's a very, very smart, understands the crypto industry quite well. And she made a statement that this administration in the U.S. is going to do everything to push out that ETF. And so far has not come. But it's just a matter of time. But then we had a full court press with the Bankers Association lobbying against anything. Now they're going after the crypto lobbyists. It's really a political debate, and so we have to say to ourselves, okay, it's going to happen, but it may take longer. Like, Caitlin Long doesn't believe it's going to happen until almost this time next year. And so I don't know that, but I do know that the ecosystem continues to grow. My pulse on this is going to these conferences where they get 7,000 people, $1,000 a ticket, 20,000 people. You can't get that for any other industry. Where you have people writing a check. They expect it to be free. In my mutual fund world and ETF world, the biggest is Orlando, biggest conference for that space. And all the newsletter writers show up, but the ticket's free. You get 8,000 people and it's free. it's not free for a crypto event. So there is a lot of money going into it. And where Aydin and I see all the money going in institutionally is into this high performance computing and AI. The amount of money is going in that space. So we believe that there's money going into building out the adoption of Bitcoin. And we're seeing the revenue on the network growing with ordinals and the idea of using ordinals. And we're very early in that space. We know that we have some special satoshis that are worth so much more and we've commented on this before. So we believe that we want to hold it. We want to own this because we think that it does trade higher, and so that was a big reason. So if the ETF doesn't come out right away, it's okay. Those that have the most Bitcoin in the balance sheet can win that battle, because people come to own HIVE as a proxy. There's many investors when it first launched HIVE that were afraid to go to a crypto exchange to buy Bitcoin. They use HIVE as its proxy. And we think that that's now going to grow again going into the next few years. And I think Michael Saylor's done a phenomenal job. Aydin, what's your thoughts on this?
Well, I guess you asked a couple good strategic, what's this 2024 look like with the halving? And I sometimes like to point to the past to look to the future. So in the last halving, both of which Frank and I had survived through, and not a lot of the crypto mining companies around today, some, but not all, lived through a halving. And so Frank and I both did, and two key strategic acquisitions Frank made into halving was the Lachute facility, 30 megawatts, and the New Brunswick facility. And so there's usually a lot of carnage in the 6 to 9 months following the halving. People study hash price and they study, actually most people just look at Bitcoin price and difficulty. But you have to look at things that are more granular, like hash price, and understand how grisly things can really get. And a lot of miners go under during that period. So what I'm getting at is there's usually exceptional opportunities to acquire assets in the wake of the halving. And, people might have a little bit of a treasury, or they might run unprofitably for a bit, but eventually they'll feel that pain, because Bitcoin doesn't rally historically right after the halving. It could take 9 to 12 months, what have you. And so we've had what people don't realize is we've had rather bearish mining economics for the better part of the last year. And so only now it's started to uptick in the last month or two. So I think that people are so obsessed with future growth and overscaling and overcapacity that anyone who's over leveraged and anyone that doesn't have a bulletproof halving plan suddenly becomes an opportunity for other companies in the halving, right? So we look at it opportunistically, number one. Number two, the ultimate hedge is to have a high margin business with our GPUs that is completely isolated from the halving, right? So I think that that's really exciting. And I guess in terms of, I don't know if Frank spoke about the ETF I mean, we were talking about just this morning, but I think everybody's banking on, the ETF gets approved. What if it doesn't? What if it doesn't? Then what? Right? Have you planned have you planned for your downside? Right? And you know what? All our press releases, we've been upgrading our internal fleet, right? We have over 6 exahash of ASICs, and once installed, with our key pros, we'll have 4.8 exahash. But this is what I said at the top of the interview. That's at an average fleet efficiency of 29 joules a terahash. I want our operating fleet to have the best efficiency, the lowest joules per terahash possible going into the halving, because the unit economics have to be sound, right? If your unit economics are not sound, the bigger you are, the harder you fall. It wasn't that long ago that some very recognizable names were filing for Chapter 11 in 2022. Like, people have a very short attention span, right? You think that was rough, the halving is going to be rougher, right? So it's about getting your unit economics as sound as possible, and you can really spend in leaps and bounds in the wake of the halving. But personally, I spend my late nights is just exploring the nuances and the outer reaches of AI. Like a week in AI is almost like a year in normal society. Like I'm not kidding. You know, we are like Frank and I. We were at a top VC in Silicon Valley, and they had a AI summit, and all of these they selected a few winners to present. So we were in a room, and it was like a moment in time. You know, like it just you had kids that were self-taught coders. You had guys that were Stanford PhD, Google DeepMind alumni, and we met them all, right? And candidly, we're working with them all. And so what you see is right now, okay, this is going to be a good takeaway analogy for you, okay? In the 60s, IBM's total addressable market for the computer was five computers. They were like, if we sell five of these things, which look at this thing that takes up this entire room, you know, that'll be a great year for IBM. And now this is more powerful than that computer that took up an entire room, right? And so what happens is you scale and you get more dense compute. And so now compute is everyday part of our life, right? I mean, you're recording on a screen on a computer. You got another computer just sitting behind you idle, right? Like they're so ubiquitous. Now, here's the distinction. For AI, you have the equivalent of that big IBM mainframe, which is ChatGPT. That's living on OpenAI servers, right? Which is closed book, it's centralized, and it's 1.8 trillion parameters trained on God knows how many tokens. And by the way, there's two things. You got to do token count and parameter count in AI, and there's a bunch of arithmetic. I can send you some fun articles when you can calculate the number of floating point operations. I'm not going to go down that rabbit hole. That's for another day. But anyways, you got to learn this stuff. Like I could just be here like, yeah, AI is cool, but like, do you really know how this stuff works? Can you compute the same way we compute the dollar per kilowatt hour revenue of an S19J Pro? Is the same way can you compute the number of floating point operations that an H100 can perform, and do you understand the economics behind that? So anyways, understanding the quantitative aspects of data processing in AI, you then say, okay, so we want everybody to have large language models, and we would love everybody to, because when you're doing ChatGPT on your phone, you're not doing it on your phone. It's just a web client, and you're just dialing into their server, and you're running an inference, right? What all the smart kids are trying to do is to have a mini model that can live on your phone, open source, and you own the data, you own the inputs, the processing and learning, and the output exists solely on your device, right? And so what you need is much smaller models. I'm talking models are like 200 times smaller than GPT-4. And so if GPT-4 is 1.8 trillion parameters, and you got guys that have models that are 7 billion parameters, that's 200 times smaller, okay? And when you have performance out of something that's 200 times smaller, but you're about like 80 to 90% the accuracy in a specific subject as GPT-4, that's where the magic is. And that's what's happening right now. And whether it's, Llama or Vicuna or Goliath or all of these models with Baklava with funny names, these are open source models that are being developed by these coders that are very compact and very powerful. So that the future of AI is having large language model processing everywhere and not centralized. Like you have the whole model, the whole kit and caboodle on your phone or whatever. And that is where and you'll own the data. And so what we're trying to do right now is we're building the infrastructure. We're building the picks and shovels. We are the picks and shovels play to pave the way for that, right? The hyperscalers want everything to live on their servers and, massive models with like, Claude from Anthropic or, GPT-4 with OpenAI. They're just like, come use our web client, upload all your data, ask us our stuff. It's like uploading pics to Facebook in 2012, Like it's their data, like as soon as you upload it. And if you ever try using the offline version of GPT-4, it's basically spayed and neutered, Like if you want it to be like really smart, you've got to connect to their server. So we're trying to parlay that where we can have truly decentralized open source AI. That's it.
Yeah.
Sorry, I went on a rabbit hole, Frank.
Yeah, you did. But I think the big point is that we're preparing to have a strong balance sheet going into the halving, to have the most efficient machines, maintain our 1% because we don't see inflation leaving the industry. And we feel that if we can maintain the 1%, hold all of our coins, then we're doing a great service for people that are looking for HIVE as a proxy in the crypto ecosystem. Then the other dynamic part is where we like to be innovators is the HPC strategy. Yeah. It's really simple. We're the only people I believe that really offer you that two-prong ability in the great digital transformation.
No, I love it. I know I personally have learned a lot, and Aydin, you're more than welcome to go down the rabbit hole on this channel. That's what I like to hear. Couple quick thoughts. I went to Houston and I saw mission control for the moon landing, and you're right, it's a room of computers with ashtrays, was funny enough in the room, and now the cell phone can have more processing power than those moon landings. So you're totally right. The rate of change and adoption and transformation is incredible. The other point I really like that you said, and this I'll give credit to my old boss, he said, hope and faith are girls' names. You can't run a business on that. And you're right. We all hope the ETF will be approved. We all have faith in Bitcoin long term. But at the end of the day, you guys are running a business now, and you need to be making money now, not if the ETF gets approved. So I think that really is a key differentiator for HIVE, is you're building that strong structural foundation regardless of ETF or Bitcoin or hash rate or whatever, right? So I think that's a very fitting close. I really appreciate your guys' time. Obviously a wealth of knowledge. Both of you are extremely intelligent and know this industry inside and out. Look forward to having you back. HIVE's one we're going to continue to follow in the new year. And happy holidays, you guys.
Happy holidays. And still, it's all Bitcoin to the moon. Just
ho, ho. Have a merry old season.